from Washington, D.C., this is Balance of Power with Joe Mathieu and Kayleigh Lines.
Will the EU be next? Welcome to the Wednesday edition as Bloomberg reports progress now on a possible trade deal with the European Union that would include a 15% tariff just hours after the White House announced a trade deal with Japan. I'm Joe Mathieu alongside Tyler Kendall in Washington. Thanks for being with us on Bloomberg TV and radio. Markets love this news, Tyler. And over the next hour, we're going to be exploring what's inside these deals to the extent that we know. We are short on a few details so far.
Right, exactly. And the reporting when it comes to the European Union, they potentially could be ready to accept a 15% tariff. Joe, our understanding had been that they were angling for a 10% tariff. Right. Joe, it does appear that the administration is sort of ratcheting up the levels when it comes to these baseline rates.
That's true. We wonder if 15 is the new baseline after we saw a couple of these with regard to the Philippines at 19, now Japan at 15. We're going to go to the source this hour a little bit later. First, some reporting from Josh Wingrove. We're going to talk as well with Congressman Brendan Boyle, the ranking member on the Budget Committee. But Tyler, Peter Navarro, the president's trade advisor, the hawk when it comes to tariffs and China, is going to be with us in studio to get a sense of what's going through his head today as we have new reporting as well that the EU might be next.
Right, exactly. And of course, we're watching closely when it does come to China because we know the administration is gearing up for its next round of talks, the third round of talks that's going to be in Stockholm. And we're looking to see what sort of concessions potentially could be on the table here when we've already seen the administration put forward some measures, at least, to keep the ball rolling, such as those H20 chips being able to be sold to China from NVIDIA.
Well, markets aren't waiting around to find out. You see Wall Street today, we were at new highs when those EU headlines broke on the terminal.
Right, exactly. And that is where we start by heading over to Charlie Pellet in World Headquarters in New York for a check on how those markets are doing. Hey, Charlie.
Hi, thank you very much, Tyler. We are looking at an update here, putting it mildly. The Dow, the S&P, NASDAQ all surging on trade deal optimism. Right to the numbers here. Rally underway with the S&P. Now up 29.6339. That is a gain of 0.5%. Yes, a record on the S&P. The Dow up 372, up 0.8%. NASDAQ Composite Index up 44, up 0.2%. NASDAQ 100 Index back in the green. Little changed, up under 0.1%. Russell 2000 Index is surging 1.1%. And the Mag 7 Index ahead of earnings after the bell from Alphabet and Tesla. That index up by just about 0.1%. The 10-year, 4.38%. The 2-year, 3.86%. Gold down $43 the ounce, $33.88, a drop there of 1.3%. And West Texas Intermediate crude down 0.3%, $65.15 a barrel on WTI. A record-breaking run in stocks gaining fuel as the U.S. reaches a trade agreement with Japan. And speculation is growing about a similar deal with the European Union. Keep it locked in to Bloomberg Television and Radio for the latest, specifically Balance of Power. We got you covered on any and all developments. Again, after the close of trading, we've got Tesla now trading lower, giving up earlier gains, down just about 0.1%. Alphabet down 0.7%. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Mathieu and Tyler Kendall.
All right, Charlie Pellet, many thanks. We'll get back to Charlie for his take on the Wednesday trade. Seems to be getting better with time here a little bit later on this hour as we consider the impact of trade deals being announced at the White House. Of course, it was Japan late yesterday. We talked about it here on Balance of Power. Has its own elements that the president trumped last evening at the White House. That has been followed, of course, by news on the terminal here that the EU could be next. We're going to explore both of these ahead. Listen to the president from last night at the White House.
I just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. We worked on it long and hard, and it's a great deal for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that. We're doing things that have never been done in this country before, and our country is becoming very rich again, and that's the way it should be.
One of the main focal points when it does come to that Japan deal has to do with this $550 billion investment fund. It's something that the administration is touting as innovative and ultimately helped to get that trade deal over the finish line. And that's where we want to start by bringing in Bloomberg's Josh Wingrove. He helps to lead our White House coverage here. Josh, thanks for being here.
Thanks.
I'm wondering if you could help us connect the dots here, because we saw this deal emerge with Japan. The administration says that this investment fund ultimately was what helped to clinch the deal. Should we expect other trading partners, such as the European Union, to put something that the administration deems innovative on the table? One, would they? And two, what would that even look like?
I think innovative is going to be in the eye of the beholder. And I think the Japan situation was pretty unique. I think you could make the argument, for instance, that they had fewer ways to fire back than Europe did. They had less leverage that way. What they had was a pocketbook to make this pledge. Now, I should note we do not have details on it. And as we've been saying in our reporting, of course, the number was 400 printed on the president's desk until he scratched it out with Sharpie, and then it was 500. Now it's 550. We don't know details. The Japanese are saying these are loan guarantees. The Americans saying something different. Eye-popping number any way you cut it. One that'll be difficult for other countries to match. Perhaps South Korea, looking at a similar model. They have similar concerns to Japan around auto tariffs, steel tariffs as well. So, you know, a big one here. I'm glad my toddler was asleep when this really popped off, because that really smoothed my night over a little bit. That was important. But I think one thing here is to back up, like, so much of Trump's view on trade was forged, like in how he, like, you know, with Japan in the 80s, in New York, and like all the consternation around that. So this is symbolic in some ways, but I think it's just really too early to say whether it's a template for the EU, and of course we're seeing today progress potentially on the EU, or other deals like the South Koreans. We do think, though, that, you know, you start looking at this 15 number as more of a floor. One other thing that Trump did was scratch out 10. Right? The initial deal here was the Japanese would go down to 10 on general goods. No dice.
So this fund, this $550 billion, and to your point, yes, smacks of the 80s when the refrain was Japan is buying the ground beneath our feet. Is that the cost of selling cars here? That's the carve out for Japan? And where's all that money going? Can we do anything we want with it?
It is so unclear. I cannot stress this enough. It's like there's no details on it. No one's put anything in writing yet. We're going to see.
Including Tokyo.
They're correct. And the Americans are saying this is new money. For instance, SoftBank has already talked about a $100 billion pledge. The Americans are saying new money, so that would seem to preclude them sort of double counting previous announcements, which Trump has not been shy about doing in the past on things. For instance, of course, the Nippon Steel deal as well. So they're saying, look, we're going to have, like, you know, a new chips fab, going to be a $100 billion project. We heard from Secretary Lutnick and Secretary Bessent this morning on this. The Japanese got to come up with the money, and then the operator leases that plant. But there's so many ways to slice this apple if you wanted to, and you know, for instance, how they calculate what the net profit is, you know, how the Americans get their share, who knows? But for the Japanese, this was the price of getting it down to 15. In essence, actually 12.5, because Akazawa is saying that the MFN rate is included in the 15. So previously, before all this started, the auto tariff was about 2.5, and now it would be 15 for them. They can work with that. And now if you're the South Koreans, you have more pressure to try to match that. They, of course, have less domestic U.S. production than Japanese companies do. And if you're other automakers in Europe, in Canada, and Mexico, these numbers, you know, probably change your calculus a little bit as well.
Well, since we are talking about how autos really were at the heart of this deal on both ends, the administration also says that it's going to see perhaps more lenient standards for U.S. automakers. Sector-specific tariffs have really come into these negotiations under Section 232, enacted on national security concerns. These are totally separate from the so-called reciprocal tariff plans. Can you just walk us through, is this where the U.S. perhaps has more leverage? Is that why they're coming into the conversation in a meaningful way, or were they always supposed to be intertwined?
Yeah, I think it's a glass half full empty scenario right here. They had always separated these out, and the hint was that the U.S. did not want to budge on these sectoral tariffs, which, by the way, have a stronger legal footing than the IEEPA tariffs that we've been talking about there. So they're more bulletproof. And in some ways, they didn't. There's no change in steel tariffs, for instance, with the Japanese, who, of course, just bought one of the biggest American steel producers. So, you know, it's... In some ways, you're looking, hey, look, you know, maybe there is room for negotiation. The door's open to some of these 232 tariffs because the Japanese brought it down on autos. But they didn't on others, and it's still a little fuzzy on what they agreed to on pharmaceutical tariffs and semiconductor tariffs, which are coming. And they seem to be some sort of concession to the Japanese on that as well. But again, the price, if $550 billion of a presidential directed fund, which is what they're saying it is, Trump can pick a project, flick of a pen, and the Japanese have to fund it, is the price of bringing a 232 down 10 percentage points. That's going to be a pretty high price of entry if you're a country that is wanting to bring yours down as well.
Getting into the granular with Josh Wingrove, Bloomberg White House correspondent. Josh, thank you. Maybe next time we talk, it'll be about a deal with the EU.
Thank you. As long as it's before or after bedtime.
That's something we'll make sure is the case. As always, Josh Wingrove. And we want to add the voice of Congressman Brendan Boyle, who's, of course, ranking member on the House Budget Committee, also representing Pennsylvania's 2nd District. Congressman, it's good to have you back on Bloomberg TV and radio. I'm really curious to get your ideas here on the budget writing process, because it looks like it could be fraught this September. But I'd like to ask you about the matter we're talking about at hand here, the trade deals that have been emerging from the White House. Some say this is vindication for the tariff regime. What do these deals with the likes of Japan, the Philippines, and others mean for your state in Pennsylvania?
Well, great to be back with you. Let's be clear. The reason why my state, the Commonwealth of Pennsylvania, voted for Donald Trump by just over a percentage point is because overwhelmingly voters who swung from 2020 to 2024 were saying costs were just too high. I heard it anecdotally all over my district and really all over the Commonwealth. I even observed focus groups that was of swing voters, and it was so consistent. I would say for at least 80% of voters who swung, it was because of high costs. So what has Donald Trump done his first 6 months in office? He hasn't solved the problem of costs and goods being too high. He's actually made them worse. We see Amazon raising their prices on all sorts of goods, Walmart quietly raising their prices on all sorts of goods. The main driver of this, of course, the tariffs. This has been a real problem for our economy. The Fed has outright said the reason why they are keeping interest rates as high as they are because of the uncertainty of high tariffs. So forgive me if I don't applaud when the arsonist starts to put out the fire that he started in the first place.
But, Congressman, at the same time, you also represent a state that's home to a lot of steel production in the United States, and we've seen many of the steel manufacturers applaud these tariffs in terms of a more protectionist policy. I'm wondering if you would caution the administration when it comes to any sort of potential carve-outs or limitations on these sector-specific tariffs like steel as they are negotiating these deals going forward.
Yeah, I'm glad you brought up this example because whether you know it or not, you actually are bringing up an example of an area where I have supported tariffs. Now, what's the difference? I've supported tariffs in the past and currently as it applies to specific countries that are behaving in bad behavior and on particular products. So, for example, tariff on China for their constant, incessant steel dumping to hurt the U.S. steel industry. That is an example of using tariffs as a tool in the toolbox. But what President Trump is doing is entirely different. Placing tariffs on over 90 different countries, many of whom are close U.S. allies, such as Canada and various European countries, Japan, South Korea, with all sorts of bizarre rates that have no justification. In fact, it's laughable when they attempted to pretend like there was an economic formula, mathematical formula to describe these underlying these tariff rates, when in fact it was a completely fraudulent, made-up thing. So that is, I think, a clear difference between using tariffs in a narrow way as a specific tool versus what Donald Trump is doing, which are tariffs writ large as your major policy.
Well, Congressman, I want to know what is in your toolbox right now on the Budget Committee, because we've been talking with some pretty angry Democrats since the rescissions package passed days ago and not that much longer ago, the president's big, beautiful bill. Are Democrats going to be party to debate, to regular order, if there is such a thing, in crafting a budget for the next fiscal year? Or have Republicans burned the bridge? And your response will be a middle finger.
Sorry, you threw me for a loop on the middle finger reference. Obviously, you know I'm from Philly, so you thought that I might be familiar with that gesture and a Philly sports fan. But anyway, I'll instead just talk about the budget process. Republicans, unfortunately, led by Russ Vought, the most dangerous man in America that almost no one has ever heard of, they are breaking the budget process. And the way they're doing it is by trying to have a normal appropriations process one day, and then the very day after saying, okay, but we're going to unilaterally rescind X, Y, and Z and break the agreement that we just reached. So, look, I don't believe in government shutdowns. They're costly. They don't make any sense. I don't want to see one. But let's be clear, I am not going to support a continuation of the status quo in which this administration is acting illegally as it relates to impoundment and rescissions. Let's not forget, the prevailing law here is the Budget and Impoundment Control Act of 1974. The Supreme Court has previously ruled unanimously that what previous president did, President Nixon, when he went down this road more than a half century ago, the same road that Donald Trump and Russ Vought are going down today. So that's where things stand on the budget. If we are going to have regular order, then you certainly will see why Democratic support, but that's not what we're seeing from this White House.
But Congressman, let's say there's not regular order. Does that then make a shutdown perhaps inevitable here? Because you said that you don't want to see one, but we've spoken to a few different Democratic House members in the past week who seem to be flirting with the idea that Democrats could gain more leverage if they do threaten to shut down the government.
Well, I would direct you to actually a longer piece that I wrote for the Bulwark a couple days ago that kind of fleshes this out and adds entire clarity to what I'm saying. What I'm saying is that we need to get back to regular order, have a normal appropriations process without these unilateral rescissions. If the administration continues to do that, then I certainly would not be in favor or vote for a scenario in which we reach an agreement on a Monday on a bipartisan basis, and then the very next day on a Tuesday, the White House says, oh, thanks for your vote for that. We're now rescinding X, Y, and Z in that bill, but we're keeping the parts that we liked. I'm not going to be a sucker, and I'm certainly not going to go along with that. So I believe actually a shutdown is more likely than not, and it is directly as a result of what the White House is doing when it comes to the budget and rescissions.
The headline on your piece in the Bulwark is why Democrats must think hard about voting to fund the government. If that's the starting point here, Congressman, you wonder where we're going to be post-September. Will it be incumbent upon Democrats, if you are willing to vote to shut down the government, to also have a plan to reopen it at some point?
Yeah, let's be clear. Republicans, as they constantly remind us, are in the majority in the House and run the House. They're in the majority in the Senate and run the Senate. And they control the White House and all the executive branches. If there is a government shutdown, it will be because Republicans want to shut down the government, period.
Does another rescissions package, we've only got a minute left, make that more likely? If Republicans decide to rescind education funding, for instance, we can bank on a shutdown.
There is no question that another rescissions package from this White House is them essentially saying, we want a full government shutdown. Russell Vought, by the way, last week, let's not forget what he said. He said the problem with the budget process is that it's too bipartisan. So he's outright saying that they want a government shutdown and they want to force one.
He's the ranking member on the House Budget Committee and knows what he speaks when it comes to budget matters. Congressman Brendan Boyle, Democrat from Pennsylvania. We appreciate the insights as always. Let's stay in touch as we get closer to September 30th and have a good recess if we don't talk to you before then, Congressman. Alongside Tyler Kendall in Washington, I'm Joe Mathieu. We'll assemble our panel next, only here on Bloomberg TV and radio. Wall Street, of course, keying off the news from here in Washington. It's so often we meet at this time on Bloomberg TV and radio to connect the dots between Washington and Wall Street. And that is the case today with a series of trade deals that have been announced in the past 24 to 48 hours and maybe another one to come. Of course, Tyler, it was Japan last evening that moved the markets for the better this morning. There's now talk of a trade deal looming with the EU, which brought us to new highs for the day. Right,
exactly. It's been really interesting to see how this has all unfolded because Japan was one of those countries that was long prioritized by this administration for a deal. Officials said that they came early and often, but then there appeared to be some tension before we got this deal that we now see. And the administration is really out in full force touting the negotiation and ultimately what is in this framework that we've seen from the president. And that includes Commerce Secretary Howard Lutnick. He was here in our D.C. studios earlier today. We want to bring you part of his conversation with Bloomberg's Anne-Marie Herdern earlier on Bloomberg Surveillance.
The Japanese are going to give America the ability to choose the projects, decide the projects, and execute the projects. So let's say we want to build generic pharmaceuticals, right? We don't make antibiotics in America. So the president says, let's go make antibiotics in America. The Japanese will finance the project. They will finance the project, and then we'll give it to an operator who'll run it, and the profits will be split 90% to the taxpayers of the United States of America and 10% to the Japanese. So they basically bought down their tariff rate by this commitment of we will back what you, the president, want, and you, America, want to build in America that are key to national security concerns. We'll back that, and therefore we'll be on your side.
The Prime Minister, Ishiba, says these are loan guarantees. Is it more than that?
Of course it's more than that. It's equity, loans, and loan guarantees. They have to deliver the project. So we say, let's build semiconductors. We want to build $100 billion worth of semiconductor fabs, is what you call them, because we want to make those chips in America. The Japanese will finance that whole project. They've got to put down equity, loans, whatever they want to do. They have to deliver the $100 billion.
Or Japanese companies?
Oh, no. Anybody does it. It's the Japanese are the financer. They're the banker. They're not the operator. It's not Japanese companies. So when people get confused, this isn't like a Japanese company like Toyota coming in and building a factory. No, that's Toyota. This is literally America saying we want to build generic pharmaceuticals, semiconductors, critical minerals here.
Does anything like this exist now? Like, what could we think of and model after
That's why you have someone like me who joins the government. I mean, this was my idea in January. So I started, because the Japanese are never going to really open their market the way Donald Trump wants them to open it. I mean, open it. You know, so what happens is they had to come up with another way to really make it work and the tariff model work. So I suggested to them a $400 billion fund where they would give to the president and they would give to America the financing to go build out your whatever you think for national security. Go build it. We'll back you. And that's the model.
The reports the Prime Minister, though, may be resigning. Could this deal transcend domestic politics in Japan?
Of course. I mean, it's vital. You saw what happened to their car companies. They were all up more than 10% today. So a 25% tariff delivers what Donald Trump said. Build it in America. A 15% is right on the edge. It's right on the edge, so the Japanese car manufacturers can still produce in Japan, and that's what the Japanese wanted to buy. They wanted to buy that line where they could stay in Japan for some cars, build, of course, huge amounts here, but also what they did is they'll invest and give Donald Trump the tools to invest in America.
That was U.S. Commerce Secretary Howard Lutnick speaking with our Anne-Marie Herdern on Bloomberg Surveillance earlier this morning. And trade is where we want to start with today's political panel. They're both Bloomberg Politics contributors. We have Rick Davis, partner at Stonecourt Capital, and Jeanne Zaino, senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick, I want to come to you because we're starting to gear up here. There appears to be more deals potentially in the pipeline. It might not be 90 deals in 90 days, but when we see a significant trading partner like Japan get this framework, is this enough for the administration to tout its tariff plans as a win?
No question. This is a major tariff or major trading partner of ours. And these are the, 12 to 19 countries that really make up the bulk of our trade relationships around the world. They're clearly who the administration is focused on to craft these more bespoke trade relationships. And this is pretty creative. I mean, the idea that Japan's going to serve as a bank to finance our critical needs, whether it's on infrastructure, pharmaceuticals, other things, is pretty unique. And I think Americans will get it. That's $550 billion that they don't have to pay in taxes to do the same thing. It's kind of like an infrastructure bill, $1 trillion infrastructure bill, but not being paid for by American taxpayers. That can be a pretty salient political argument. And I'm a little surprised that they haven't attached in their talking points either Secretary Bessent today or Commerce Secretary Lutnick on Bloomberg that this is really relief for the taxpayer. We continue to build infrastructure and become a stronger economy, but we don't have to charge the U.S. taxpayer to do it.
Pretty interesting, Jeanne. What's your thought on this? Having been a critic of the tariff regime and Donald Trump's approach to trade, does the White House deserve some points for creativity with this investment fund?
It's absolutely creative. We just don't know what it means. I mean, what is this? What is the time frame? What are the guarantees? Anne Marie asked an excellent question, which was what happens given the political uncertainty in Japan at this time if the prime minister steps down? And that could be any day now. Going forward, what happens to this pot? And what kind of deal is this? It's a pay-to-play scheme, it sounds like, where you pay us, we get 90% of the benefits. Never heard anybody make that kind of deal. And then you get these tariffs that are no longer 26, 25, 24% down to 15. So there's so much about this that we don't know and don't understand. What we're getting is Donald Trump's usual Truth Social announcement without the details and very little from Japan's side, except the market expressing relief that it's not quite as bad as it could have been. So if somebody breaks into your house and says they're going to shoot you in the head and ends up only shooting you in the arm, you feel a lot better, except in the long term, what have you done to the economy? And one thing, oh yeah, Joe, I'm fired up. One thing I would just say to what Rick said is tariffs, and this is driving me crazy, tariffs are a tax on the American consumer. Look at GM, look at Stellantis. They have been hurt in these last few quarters, and they have absorbed those costs now. They will be to the American consumer going forward. They will not continue to absorb them.
Right. Well, Rick, when Jeanne mentioned General Motors, we saw that they suffered a $1.1 billion profit hit from the administration's tariffs. They revealed no plan for a near-term fix. I'm wondering how you're thinking investors are looking at this. Shareholders are looking at this as these companies say that for now they're absorbing some of these tariff costs.
Yeah, look, each company takes a different tack to it. And some of those companies have been willing to take the hit on their own balance sheet before sending them out to consumers. Some companies don't have the consumer base that others do to do that. So it's really an individual decision by the C-suite to figure out what they're going to do in this regard. I do think that in general, people are getting more and more bullish about the fact that we're getting through the uncertainty period in the tariff regime. Remember, when this started a few months ago, nobody knew how it was going to end. These numbers were skyrocketing. I mean, 35, 55, 100% tariff regimes. I mean, markets were reacting very negatively. And now we've got it down to really arguably more reasonable numbers. I mean, Jeanne needs to understand we've always had tariff regimes. And so, yes, some people and certainly a lot of Republicans I know are not big fans of tariffs, but it's not like this is the first time a tariff's ever been applied. And right now, it looks like if this 15% tariff is a floor more than could be a floor, could actually result in not a whole lot of damage to the U.S. consumer and yet create some certainty around the cost of doing business abroad.
That's what the market seems to think, Jeanne, and the EU could be next. Bloomberg is reporting that the European Union and the U.S. are moving toward an agreement that would set a 15% tariff, once again in this case, for most products. There's more to this as well. Steel and aluminum imports above a certain quota would still face the 50% duty. If this emerges, reporting is this is imminent. If this emerges in the coming days, if it happens before August 1st, doesn't this White House have something to celebrate?
They will absolutely celebrate it. And, they're nowhere close to their 90 and 90 days. We don't know what happens August 1st. So it's hard to imagine they can get there. It usually takes about 2 years to iron the details out on a trade deal like this. So, God bless them if they can move any of these forward in the next few days, and they will celebrate them. But who else is moving forward on a deal with the EU? Japan. You know where else they're going? They're going to China. And this is something that hasn't come up in this conversation, which is the fact that these special relationships with allies that we have long had, they are no longer special. And that has become perfectly clear to Japan as they move to China. And so what does that do to the national security, let alone the economic security of the U.S. when you look at the long-term impact? Are we throwing away enormous power and sway that we had in the interest of short-term benefits? And I can tell my dear friend Rick, I know very well we've had tariffs, but we've only usually had targeted tariffs. These blanket tariffs on allies with many, many reasons for them, we have not seen to this degree. And so this is an absolutely new approach in the modern era, and we don't know how it's going to pan out.
Well, Rick, let's just pull on one thread that Jeanne had mentioned there, and let's talk about China briefly, because we have seen the administration say that President Trump has a good relationship with Chinese President Xi Jinping. President Trump said the other day that perhaps a visit to Beijing could be in the not-too-distant future. How should the administration be prioritizing talks with China when we know that this is such a significant trading partner for the U.S., but that it's going to take a little bit longer time here to actually get a trade deal done?
Yeah, let me just start with one thing. It is a gross exaggeration to think that Japan is turning its back on the U.S. and looking for security with China. There are significant problems between the China and Japan relationship, and they are a useful and very helpful ally to us in the Pacific. That said, we'll see what happens in Beijing. Hopefully, a dialogue can get started soon.
We'll talk to you about it when it happens. Rick Davis and Jeanne Zaino, Bloomberg Politics contributors, making up our great panel today. We thank you as always. Peter Navarro joins us next. The Source on Tariffs, straight ahead on Bloomberg. We're gaining momentum here in earnings reporting season. We'll have a lot more to talk about after the bell. We're gaining momentum, Tyler, in the number of trade deals being announced by this White House. First fire to be lit under this market was Japan. Now headlines of a potential deal with the EU got us to new highs for the session. We've got the S&P 500 now up about 0.5%. The Dow's up 1%. Investors love where this is going, it seems.
Right, and we should point out a really critical part of this deal when it comes to Japan is that 15% tariff is going to extend to autos. This is something that we know Japan has been pushing for. Our data from Bloomberg Economics shows around 80% of that country's trade surplus with the U.S. is in car and auto parts, something that we've been watching really closely. That's
right. And as we promised you, a conversation with the source when it comes to tariffs at the White House. He's with us right now in studio in our Washington bureau. That would be Peter Navarro. I want to get the title right, Peter. Senior Counselor to the President, Director of the Office of Trade and Manufacturing Policy at the White House. Welcome back. You're the first person I thought of this morning. I saw the details on Japan and I thought, Tyler, what does Peter Navarro think about this? Because it was a 25% tariff at one point, right? And now we've got a very creative wrinkle with this investment fund.
Yes.
Was this in your vision for trade deals?
Yeah. Look, for your viewers and listeners, let's see where we started, right? We come in, President comes into the administration, we got a 2.5% tariff. That's basically what we're charging Japan. We went to 25% tariffs on autos through what's called the 232, right? And then we instituted a global tariff on Japan. And what we've got here is a beautiful thing. We go from 25% to 15% on autos for Japan. That was part of what President Trump was trading. The sneaky great thing about this is the $550 billion that we're going to get from Japan, and essentially as a blank check to invest in America. And the thing that really needs to be understood here is it's going to be used to basically cure our supply chain vulnerabilities. Okay? This is really important. We've seen in the pandemic that we were exposed on pharmaceuticals. We know we've got a chip problem where too many of the chips are made offshore. We've seen recently with China, their export restrictions on things like gallium, on rare earth magnets, critical minerals. And so this money, and Howard Lutnick, the Commerce Secretary, I think is going to be the symphony orchestra guy on this. We are going to figure out every vulnerability we have in our economy and make sure that we close that gap with now the help of the Japanese. So for me, that's the big thing. Now, the other thing to keep in mind here is, because I know you're going to ask me about what's happening with the EU and things like that, what this deal does, as what the Indonesian deal did, is it spurs other deals along, right? In this case, right now, we're in a situation where, for example, German cars are going to be at a disadvantage now to Japanese cars because it's a 25% tariff on German. Same thing with Hyundais from South Korea. So as it's just watching the boss. I mean, I'm almost getting tired of winning, but I don't think he ever will. Okay, but as I watch him, he's like a maestro. He wasn't doing a Japanese deal. He was doing a synergistic whole deal with the rest of the world. This is just one part of that chess game.
Well, let's follow on this and talk about the European Union, because the Treasury Secretary, Scott Bessent, was asked on Bloomberg television earlier today if the EU has put forth anything innovative, such as what we're seeing with this fund. Should we use this idea of the fund? Would that be something innovative that the administration is looking for? What are you looking for from the EU in order to clinch a deal?
Tyler, it's a great question. What I want everybody to know is that we have these large trade deficits with, we call them, the 15 big ones, right? And including the EU writ large. But every one, they're like fingerprints. Every country, or in this case, EU entity that we deal with, has a different set of problems that we got to deal with. So every deal is going to be unique to deal with that fingerprint problem. The problem we have with the EU is that they basically violate the WTO rules in terms of our ag products, so we can't export to them. They've got a tariff which was 4 times higher than ours when we got in, but they also have this thing, the value-added tax. I'd love to see some relief related to the value-added tax, which is unique. What I can guarantee you is once the deal's made, we're going to have a situation where we'll be able to sell more ag products, more autos, and we'll see a dramatic reduction in that trade deficit. But as to what it's going to look like, we'll see.
Is the design to see GMs and Fords driving around Japan, driving around Europe, or have we realized that that's not going to happen, and therefore the investment fund with Japan or something similar with the EU?
Well, certainly we'd love to see a lot more American cars driving around Europe. Japan's a tough market. If you've ever been there, they export a lot more cars than they ever use in the country. It's land constrained and things like that.
They drive on the left side too, Peter. They've got the steering wheel on the wrong side.
But I'm not going there. But what we can do with Japan is get them to buy more ag products. And the other part of the deal, which we didn't talk about, is Alaska LNG. I mean, if you think about Japan's vulnerability, they have a long-standing problem with China. There's over the Senkaku Islands and a whole bunch of other things, right? And they have to figure out a way to maintain their energy security in a world of volatility in Asia. And they're a lot closer to Alaska than they are to the Persian Gulf. Yeah, right. And so doing an LNG deal and using their money to help do it is a really big part of this. So look, they're an important ally to us, a long-term ally, and this thing works on both economic security and national security. And I got to applaud Jameson Greer, Howard Lutnick, and Scotty Bessent. What we've done is every country has a template, right? There's like 4 or 5 verticals that we look at in terms of tariffs, non-tariff barriers, digital taxes, things like that. And they're just going in, and the countries are lining up like they're at a deli pulling numbers, and they want a deal. And the president then comes in and closes it. And by the way, when he closed that deal last night, It started at $400 billion.
I saw the Sharpie.
Yeah. So
550.
Come on, you can do more. Yeah. So,
well, when we are talking about making the deals, I do have to ask you about our Bloomberg News reporting, which is that the EU sees progress towards a U.S. trade deal with a 15% baseline tariff. Is that where these numbers are going?
So let's view the spin of the game, right? The Canadians do this. Probably the best or the worst, depending on what you think of that. But we don't negotiate in public, okay? These other countries aspirationally negotiate in public to try to get us to where they want us to go. So I would say that even though it was reported on Bloomberg, I would take it with a grain of salt. Let's see what happens. Never assume that anything's fixed until the boss says it's fixed.
But should we expect that the baseline rate is tending closer to 15?
I wouldn't go there. That's aspirational of the EU. It depends on what they give the boss. I mean, look, here's the problem with the EU. Besides the high tariffs that they charge us, high tariffs, they're non-tariff barriers when we've challenged them on meat and pork. In one cases, they refused to abide by the cases, so that's a problem. I'm telling you, the value-added tax, okay? It's like on autos. Yep. You start with a 10% tariff, and you add a 19% value-added tax. That's not just a tariff. It's also an export subsidy, the way it works under the rules of the World Trade Organization. And then you got all these digital taxes that the Europeans invented and trying to slap on our big tech companies. So let's see what happens. I never get ahead of the boss. I'm happy to talk about the EU deal. I'll come right back here to talk about it.
I look forward to that.
But I caution you that if the EU is putting something out there in the biosphere out here, it's aspirational rather than maybe what's going to happen.
We hear you. When it comes to August 1st, markets, of course, want to know what we can bank on here. Are you in a world where if you get enough of these, you add a couple of more countries, maybe it's the EU, South Korea, something else that I'm not thinking of here. Do you say, you know what, it's August 1st, everybody, you're on your own? Or would you extend that to countries that are in talks with the White House?
Again, I never get ahead of that. My job is to help the trade team figure out what we have to negotiate for. Again, give you an example. For example, on the whole critical minerals, rare earths thing, when we were hit with that by China, that was a major thing, I think, in world geopolitics. Right? It's not nothing for China to withhold something that's critical to technology as they did. It was a wake-up call to the world. But what that has focused our attention on is how do we solve that problem? So now we think in terms of what's Japan, what's the Congo, what's Guyana, what can they contribute? That's one of the verticals.
Sure.
Okay. So again, let's.
It's going to be case by case, is your point.
Case by case, yes.
Well, since you did bring up China, the administration moved last week to ease those restrictions when it did come to NVIDIA selling its H20 chips. I'm wondering if you have any national security concerns around this move, which had been put in place originally because of those.
That was not my lane. I mean, basically, we're giving them the H20, and we believe that that's in the interest of the United States. I think the reporting on that was a little bit over the top in terms of what China was actually getting, but that's not something I want to wax celebrate. Get Howard here or David.
We've been lucky to have Howard Lutnick, Scott Bessent, and now Peter Navarro all on the same day in this studio, which is pretty remarkable, and we've learned a lot from these conversations. Is there any of this?
I'm like, they were like my opening acts.
I think we saved the best for last.
Sorry, Howard, Scotty.
I think we saved the best for last.
Or am I the epilogue?
I don't know. Let's ask the boss when we're done. When it comes to the defense contractors, we can talk about GM, but Tyler mentioned national security. When you hear Raytheon or Lockheed say, hey, this deal is eating into our margins when we're making missiles and military hardware, is that the cost of doing business?
So let's go back to the Japan deal. We just got 100 more orders for Boeing, and we got the Japanese to significantly increase
the impact on the margin.
We're going to do our arms sales to them. And during the first term, I was basically the tip of the spear on arms sales, and we were having some big problems with the Hill and all, and even within the State Department. And then we just turned that around and started selling F-16s to Bosnia and stuff like that. And that's good for America because it means we don't have to fight the battles. Yeah. We create jobs at home. So Raytheon's going to be quite happy. And if any Raytheon lobbyist dares criticize any particular part of the Trump thing, they're not seeing the big picture.
Okay, because the scale, the increase in business will offset the impact on margin that we're talking about, is your point.
I think that's what the markets have figured out. Yeah. I remember when the boss first put on the tariffs in the market, the Dow went below 40,000. Yeah. So I'd be sitting on a set like this. I said, what are you doing? We're going to 50,000.
We're at a new all-time high here already.
Yeah.
50,000? That's the
that'll be easy. We'll do that in our sleep.
Come back and see us when you get the next deal. It's good to see you, as always. Straight from the White House, Peter Navarro with us here live on Bloomberg TV and radio. Alongside Tyler Kendall, I'm Joe Mathieu. We'll meet you back here at 5 p.m. Eastern for the late edition of Balance of Power. It's only on Bloomberg TV and radio.